Okay, so with regards to task 10.14, we have an extract from the pre-adjustment trial balance of Little Top Dealers, which is given below. And our year end, very important, is the 31st of December 20.6. We have a balance sheet section and the nominal account section. Remember, the balance sheet section consists of assets, owner's equity, which is your capital and your drawings, and your liabilities as well. And then we have the nominal account section, which consists of owner's equity, which is your incomes and your expenses. So moving along to adjustment 1, they say that one employee went on leave during December 20.6. His salary of 4,100 Rand will be paid in January 20.7. Ignore the deductions. So with adjustment number 1, the amount was given to you. It's just saying that they basically forgot to pay this man's salary in December, but they will account for it in 20.7. So what account is that, grade 10s? It is expenses payable. And we know that expenses payable is a liability. And what is the actual expense that should be paid? Salaries and wages. Moving along to number 2. Rent has been paid for the period of the 1st of January 20.6 to the 28th of Feb 20.7. The landlady increased the rent by 80 Rand per month with effect from the 1st of January. So I've got the calculation over here, and it is a prepaid expense. When does our financial year end? It ends in December. All right, and they're saying that the lady has paid. Well, we've paid the landlady for January and February, so that's 2 months in advance. But they note that there has been an increase. Again, we'll read it. Rent has been paid for the period 1st of January 20.6 to the 28th of February 20.7. All right. So we've paid in advance 2 months. So that means we paid an extra 80 Rand in January and an extra 80 Rand in February. So looking at our trial balance, the rent expense was 11,360. So remember, you first have to subtract the increase in order to basically work out what was the rent expense per month before the increase took place. So I subtracted the 80 Rand which was for January, and I subtracted the 80 Rand which was for February, which means if I didn't have the increase, I would have paid 11,200. Okay, now that I have the rent expense without the increase in, I can basically divide by the number of months that I've paid my rent for. So you got to take the 12 months which the business has paid, adding the 2 extra months. So basically we divide it by 14 months because we have paid our rent for 14 months. So our rent per month is 800 Rand per month before your increase. All right, now I can add the increase back, which is 800 plus the increase, which will give me 880 Rand. And I paid 2 months in advance, which is why I'm multiplying it by 2. So what is the actual amount that has been prepaid? 1,760. I hope that makes sense. Moving along to number 3, it says the fixed deposit was increased by 20,000 on the 30th of June 20.6. This has been recorded. Please note, they're telling us at this point that the 20,000 has been recorded, so it's already reflected in this 100 Rand. So before our increase, how much did I have in this fixed deposit? I had 80,000. When did I increase it by 20,000? The 30th of June 20.6. Again, timelines are important. Make the necessary adjustments. Entry for the interest earned during the year. The original fixed deposit has been in existence since the beginning of the financial year. So the beginning of our financial year would be the 1st of January, because our financial year ends the 31st of December. So remember, you now have to account for the very first amount of your fixed deposit, which was 80,000 Rand before the 20,000 Rand increase. How long did you have this 80,000 Rand for before you increased your fixed deposit? You had it for 6 months. Remember, we had it since the beginning of the financial year. So January, February, March, April, May, June is when you increased it, which gives us 6 months. So I'm going to work out the interest on that 80,000. 80,000 times 6 over 12 times the 12% will give me interest of 4,800. Now I need to account for the other half of the year. I had the 80,000 and I'm adding that 20,000, which gives me my interest on, not my interest, my fixed deposit, a total of 100,000 times 6 over 12, because remember now from July to December, that is 6 months. So July, August, September, October, November, December, you had that for 6 months as well. So 100,000 times 6 over 12 times the 12%, you get 6,000 Rand. So if I add the interest from the 80,000 and I add the interest from the 100,000, I should get 10,800 Rand. I am going to subtract 7,600. Why am I subtracting that? Because it has already reflected. Can you see here? Interest on fixed deposit, that income has already come into our account. So you're going to be subtracting that. How much of that amount must still be paid to you? 1,700 and I'm sorry, that's the wrong one. 3,200. Moving along. What did they say? $2,000 commission income was received in advance. So they've given you the 2,000 Rand as it's got a prepaid, not a prepaid, income received in advance. And then our depreciation on vehicles is written off at 20% per annum on the fixed installment. So I'm going to have a look at the cost of my vehicles. It's 450, and I'm going to multiply it by the percentage which they've given us, the 20%. So